Welcome to the Capital News. I'm your host, Alex Riots. Today is Wednesday, March 31st, 2021. Thank you so much for joining me. Title of today's podcast, Central Banks Taunt the Markets. Well, it is the end of the first quarter of 2021 already. Quite amazing how fast time is going. I remember when we were doing our first of the year podcast and saying, well, are we happy that 2020 is in the rearview mirror, or should we be more concerned or as concerned about 2021? Seems like that was just yesterday, but we are already a few months in to 2021. And the reason for today's podcast title, Central Banks Taunt the Markets, is because the other dingbat across the pond in Europe, the president of the ECB, the European Central Bank, Christine Lagarde, is now making remarks, and she is openly saying that, yeah, go ahead, for the markets to test the resolve of central banks. Go ahead and do it. Bring it on, she says. Bring it on. Well, what is she talking about? To me, she is admitting openly that if market forces were to prevail, that equity prices and bond prices would fall through the floor. Because if markets were going to continue doing what the central banks want to see happen, a continuation of financial asset price inflation, well, then she wouldn't be taunting the market. She wouldn't be saying, hey, bring it on. Give us your best shot, guy. See what you can do, man. They know perfectly well what they are engaged in. They know, well, I think to some degree the end result, or at least they are attempting to bring their end result to fruition, whatever that might be. Whether that's part of a great reset that we talked about, where it's openly talked about in the mainstream media, it's plastered all over the place, but what are the details really of it? Who's really involved with it? What does that mean for the general populace? But the arrogance of these people is sickening. And of course, this really is no surprise when it comes to their incompetence. I think incompetence and arrogance are very closely correlated. And she wants to openly taunt the markets. Bring it on. Give us your best shot. Test our resolve. They know they are inflating a massive bubble. They know that they have already created a massive bubble. They know that they are distorting, have distorted, and continue to distort one market after the next, whether that's real estate, whether that's the currency markets, whether that's the bond markets, whether that's the equity markets. This is a global coordinated effort among central banks. And it's really only a handful of major central banks that need to be in lockstep. And of course, those central banks are the Bank of Japan, the Federal Reserve, the ECB, the Bank of England, the Swiss National Bank, and hell, even the People's Bank of China, the Reserve Bank of Australia. All of the other central banks, a lot of them are in lockstep too, but they're more or less small potatoes in the grand scheme of things when you look at those other central banks and the countries and the economies that they represent. So I just want to point this out, because is this the pride before the fall type event? Because we are starting to hear the same type of rhetoric coming from one central banker after the next that continues to downplay certain risks that are right in front of us, or most definitely over the horizon, namely inflation. Oh, inflation doesn't exist. We don't have to worry about it. And then sometimes they'll lay it out and they'll say, well, if it does exist, or if it does come to fruition, it's going to be transitory. So it's only going to be here for a little bit of period of time, short period of time. And if that's not even the case, if it does turn out to be a little bit longer, don't worry about it. We have the tools in our toolkit, the endless toolkit, by the way, to contain inflation, to control it, to put it down. to get us back onto our glide path to normalcy and to economic prosperity, which of course is laughable, but this is their lingo. This is the narrative that they want to weave, because they're not going to tell us the truth. They're not going to take responsibility. They're not going to take any type of accountability for what they have done. So they're going to continue pushing the narrative because nobody is going to push back on them. Because in a system that is supposed to be built and based upon checks and balances, there are no checks and balances when it comes to the Federal Reserve, or really any other central bank for that matter, but I'm obviously primarily concerned with the United States. There's no checks and balances. Yeah, sure, Congress can call them up there on Capitol Hill and have them testify, but they don't overrule the Federal Open Market Committee when they say this is the federal funds rate. They don't overrule the Federal Reserve when they make this decision or that decision. If they want to implement quantitative easing, if they want to say, well, okay, it's okay to do quantitative easing, but you can't go over this amount per week, per month, whatever. They establish a quota. They don't do that. There's no checks and balances. This is free range for the Federal Reserve to print at will. And boy, are they. As is the ECB, which of course, their balance sheet over at the ECB is also hitting all-time highs. So is it any coincidence? Is it any wonder why the German stock exchange, the DAX, is hitting all-time highs? The narrative, again, ladies and gentlemen, that you must focus on, and the only one that ultimately matters until it doesn't, until it breaks, is the liquidity that is being thrown into the markets. The expansion of one central bank's balance sheet against another's. That's all that matters. Everything else is a sideshow circus. And as important as it may be, it is still a sideshow circus. Whether that's the $1.9 trillion monstrosity that was recently passed here in the States, whether it's the upcoming multi-trillion-dollar infrastructure spending bill, whether it's any other type of omnibus budget spending bill that comes down the pike, which I also imagine will be coming shortly, whether it's some sort of riot or protest or social justice cause, all sideshow. All sideshow. Keep your eyes on the ball. It's all about divide and conquer. Pay attention to the monkeys and the elephants and the clowns running around in the circus. Don't pay attention to the ringleader, to the ringmaster, who's running away with all the money. That's where you have to focus. And of course, that's where nobody wants to pay attention to. Nobody wants to call out the central bankers, the money powers. Nobody wants to do it. Because it's more fun to talk about the monkeys, the elephants, and the clowns. Those are your politicians, by the way, and all this other crap that's plastered in front of you 24/7 on Fox, MSNBC, CNN. And of course, because it's on TV, well, that must be all that's going on. And even when the Federal Reserve is brought up primarily on the financial mainstream media, it's never questioned. It's never challenged. It's never criticized. Or if it is, it's very, very small coverage. And typically that person who dares to criticize them gets called out, gets laughed at, and gets put down. That's how you know that's where you have to pay attention. Find out who and what you cannot criticize. That's the power center. And of course, that's exactly what the Federal Reserve and other central banks want. They don't want anybody paying attention to them. They don't want anybody asking them serious questions. They don't want the general population knowing what they do, who they are, where they come from. Dingbat Janet Yellen, our Treasury Secretary now, who was a former chair of the Federal Reserve, she doesn't want people knowing that she made several $1 million giving speeches to financial institutions, the same financial institutions that she was a regulator of when she was Fed chair, and she's still technically a regulator of them as the Treasury Secretary, because if she wants to call in those banks or any other financial institution to the Treasury for a meeting, for a phone call, for a discussion, guess what? They're going to fly down to Washington, and they're going to have a little chat. No conflict of interest. How about the another former chair of the Federal Reserve, Ben Bernanke? How many boards of financial institutions does he sit on? Well, we know he sits on the board or as an advisor to Citadel, the hedge fund that was caught up in all of the Robinhood trading and all the information that they get in the GameStop stock fiasco. Yeah, that same Bernanke, that same hedge fund. And then, obviously, this week, we discussed Archegos' capital management, the family office who was levered to the hilt, who is potentially bringing down a couple European banks and a Japanese bank. I mean, they were borrowing money from everybody, highly reminiscent of what took place. Well, my God, this has happened for a long time, but highly reminiscent of what took place in the lead up to the great financial crisis. Counterparties all over the place, not understanding the risks involved, not understanding the other counterparties that were involved in these trades and these transactions, and the interconnectedness of it all, and the systemic risk that it brings to the system, and how fragile the system is because of this. We have learned nothing from the great financial crisis. There is nothing in place that prevents these types of firms building this type of leverage. And this is the end result. And the sad thing is, of course, if this does lead to a systemic event, which it very well could, this could be another shot across the bow, that the firms that engaged in such reckless behavior are going to continue to get bailed out. Because that's what we do here, because that is the system. This is the two-tiered justice system. This is the two-tiered economic system. And this really, I think, should bring home our conversation yesterday when we discussed the Milgram experiment in greater detail. I hope you enjoyed that discussion and podcast yesterday. I know I did, refreshing my memory on it. It's a very fascinating psychological and social experiment. Just basically seeing how do people respond to authority figures. Well, we have to do this. We're the experts. We have to engage in quantitative easing, the largest wealth transfer program and experiment ever conducted in the history of mankind. We have to do it. Trust us, it works. And trust us, it's only going to be temporary, said the central bankers in 2008 and 2009. Quantitative easing is now a teenager, so much for temporary. And they're putting the pedal to the metal. And this is highly evident by just looking at one central bank's balance sheet after the next. But it's temporary. But you got to listen to us. We're the experts. Do as you're told. And of course, how this relates to the pandemic, which was the main focal point of why we've been discussing the Milgram experiment over the past few weeks. Oh, well, we're the experts, we're the doctors, we're the physicians, we're the virologists, the immunologists, the epidemiologists. We're from the FDA, the CDC, we're from the WHO, we're from a state organization, we're from a federal government operation. You have to listen to us, period, end of story. You have to shut down. You are non-essential. You're not important. Bye-bye. Well, yeah, but that's how I make my life. I am the expert. I am the one wearing a white lab jacket. Sit down and shut up. And people have been for right now a year. And it is continuing. Because you have the president of France implementing another lockdown. This is a brief article, I'm going to read some of this to you because this is important. Because France is a large economy, and of course we have been witnessing protests out of France, the yellow vest protests that were taking place throughout 2019, and we continue to see some protests, more so on a weekend basis, that continue in France. But here you have it. You have Macron gave an update on the new restrictions during a nationally televised address. He said the new rules will go into place this Saturday. Quote, "These last weeks, we are facing a new situation. We have entered a race of speed. We must therefore set ourselves a new framework for the coming months." End quote. Well, he is the expert. Now, he doesn't have a white lab jacket on, but he's taking orders and recommendations from people who wear white jackets. So now he just has to be the mouthpiece to tell everybody else. France has seen an increase in new coronavirus cases and deaths since the beginning of the year, despite the administration of millions of vaccine doses. The country reported more than 30,000 new cases and some 1,000 deaths on Tuesday. Those figures represent a 55% and 30% increase, respectively, over the past 14 days. Case figures haven't been this high since mid-November, when France was coming down from its all-time peak of 86,000 daily cases. Macron's announcement means lockdown measures in 19 regions of France will now be expanded nationally. Schools will be closed for at least 3 weeks, and travel restrictions will be in place for a month. Another month. The president also asked people to work from home if possible and implemented a nationwide curfew from 7 p.m. to 6 a.m. each day. People are allowed to leave their home for leisure, but must stay within 6 miles of their home. Non-essential businesses must shutter. How arrogant, how disrespectful. Non-essential businesses to classify people in their businesses as non-essential. They must shutter. Macron also called for an increase in vaccinations. Currently, anyone over the age of 70, healthcare workers and those in high-risk categories are eligible to receive the shot. He promised to allow those over 60 to receive the vaccine in mid-April, those over 50 in mid-May, and the entire population in June. According to the health ministry, about 8 million people in France have received at least one dose of a COVID-19 vaccine. Listen to the language. People are allowed. The government, the experts are going to allow you to leave your home for leisure, but you must stay within 6 miles of your home. And non-essential businesses must shutter. What was the language that was used during the Milgram experiment? You must continue with the experiment. You must go on. Even though if the test subject really did continue to go on with the electric shocks, that voltage would have killed the other participant. Now, of course, in the Milgram experiment, there were no real electric shocks, but that was the whole purpose, seeing how far somebody would go, simply because they understood what they were told to do. And if the other participant missed an answer to a question, they received a shock. And every time they missed, they would receive higher voltage, until it went so far where it would kill them. And most people didn't realize how much voltage they were actually sending, that it would kill them. But most people went all the way and would have given that lethal shock. So most people are going to abide by this. And those results of the Milgram experiment were a shock to Dr. Milgram himself, his psychology students, and his colleagues. Because they didn't think most people would continue to push the button, to crank the dial. But they did. They did. Even if those individuals who were cranking or pushing the button, even if they themselves were feeling some type of physical or mental stress during the experiment, whether they were shaking or sweating or biting their lips or digging their nails into their skin, they continued to crank up the dial or push the button. And so you're going to continue to see non-essential businesses shuttering. It's a suicide mission for a lot of these smaller businesses because they have been deemed non-essential by the experts in the white jackets. You understand what's going on here? How many more dots do you need to connect with what's going on? This isn't even shocking somebody else in another room. This is basically committing some sort of economic suicide here. Small businesses that offer the same goods and services of other businesses, of larger businesses, they have to shut down. But the bigger ones, they can remain open. the people around the world have to start waking up and realizing what's going on. I know that there is some awakening. Some people are finally getting tired of it. I mean, it's been maybe too late. I hope that's not the case. But look at what they continue to do. I mean, look at what Angela Merkel tried to do last week in Germany. 33 hours later, she reversed course. Oh, no, I didn't mean that. I didn't mean lockdown for 5 days. No, we will undo that. We will undo that. I'm hearing things that there might be another lockdown or other tight restrictions in Canada. They're just seeing what they can get away with. The lockdowns, the restrictions must continue. You must obey. We must wake up. That's what needs to happen. Then we had President Biden this afternoon make some remarks with respect to his infrastructure plan. And during the speech, he made comment about the statistic that we mentioned here last week with respect to the top 1% in this country, with their total net worth increasing by $4 trillion over the past year. Top 1%, total net worth increasing by $4 trillion last year. In the midst of the pandemic, in the midst of the lockdowns, the restrictions, where you have one economic variable after the next hitting levels not witnessed since the Great Financial Crisis or even the Great Depression, or even making some type of all-time low. $4 trillion increase the total net worth of the top 1%. So we're going to go back to that date. I know we talked about that in some depth about a week or so ago, but I'm going to bring it up again because President Biden brought it up again. Although he doesn't seem to understand, which of course is no surprise, that the reason why this happened is because we have counterfeiters in this country that just print money at will. And wow, isn't it a coincidence that that's where the money goes? The vast majority of it goes to the top 1% and the top 10%. But wealth inequality and income inequality, they can't solve it. They can't figure out where this is coming from. For the life of them, they can't figure it out. Not the politicians, not the central bankers. So I guess they're just going to continue to do it. Because why wouldn't they? To them, it's worked in the past. It's not the problem. It's not generating any type of inflation. It is not the cause of any type of wealth inequality. I don't even know if they would recognize that there's a correlation with it. But that's what they have to tell us. Pay no attention to it. That's not the problem. So now, instead of paying attention to what the central bank did, what the federal government did with all of their trillions and trillions of spending, and lo and behold, that's where it goes to, Joe now thinks, well, we got to take care of everybody else. So the best way to do that, in his opinion, is through infrastructure. Again, trillions of dollars that we don't have, but it is something that is needed. Now, of course, the fallacy in their argument for infrastructure spending is that it's great for the economy. Well, that might prove true. Whether it's great or good, obviously could be up for debate, but that's in the future. Infrastructure is an investment. It's an investment in the hope that when you have completed these projects, transportation, your electric grid, whatever infrastructure you're talking about is more efficient. The travel of people, of goods and services is more efficient. Energy, transportation, and transmission is more efficient. That's the goal. But in the process of constructing that infrastructure, you're going to have a lot of hiccups. You're going to have a lot of slowdowns. If you are rebuilding, repaving roads, fixing bridges, and you have a 3-lane highway that goes down to a 1-lane highway, that's not efficient. That's a slowdown. That's a major slowdown because you're not even traveling at 65, 70 miles per hour anymore. You're probably down to 50, 45 miles an hour, and it's 1 lane. If you got a few lanes on a bridge, a couple lanes on a bridge, now it's down to 1. Or maybe the bridge is completely closed down, and now you have to detour. That is not efficient. That is not good for economic growth. But if you do it right, then it's an investment that could pay dividends in the future, and that's what you're looking for, and that's where the growth can come from after the fact. not during. And another concern I have with it is, where are all the workers going to come from? Where are all the workers going to come from to do this type of massive infrastructure plan? You can understand back in the 1940s, 1950s, you had the workers. You had the workers. Most people were blue-collar workers. Most people weren't going to university back then. Now everybody goes to university or goes to college, and you have a lot of young people who don't want to do this type of manual labor. They just don't want to do it. They want to be social media influencers. They want to play video games and get paid to be watched playing video games. They don't want to go out there in the heat and lay asphalt or pour concrete or tie rebar together or hang from a bridge. They don't want to do that stuff. So where are all the workers going to come from to do these types of massive infrastructure projects coast to coast? That's just another thing that you got to think about. So let me get here to some of that data just to refresh everybody's memory with respect to total net worth by the various segments. All right, I'm going to go from the bottom up. I'm going to do, this is total net worth held by various segments of the population, okay, various percentiles. So we'll go from the bottom up, and I am going to take us back to the first quarter of 2019, so still very much so in the midst of the great financial crisis, but sort of towards the tail end of the recession, or at least the technical recession. Okay, so again, first quarter of 2009, and of course, we had quantitative easing. Okay, so we started to have this process unfold, and this also corresponds to sort of a bottoming out, if you will, during this time frame for all of these different percentiles with respect to their total net wealth. Okay. So at the bottom, we of course have the total net worth held by the bottom 50%. All right, so in the first quarter of 2009, total net worth held by the bottom 50% was at $654 billion. All right, $654 billion. That's nothing. I mean, that was less than the TARP program. Okay, now you fast forward to where we are today. Most updated data comes from the fourth quarter of 2020. In this same group, the bottom 50% is now at $2.5 trillion. All right, so a decent increase, at least from a percentage standpoint. From a total dollar standpoint, about $1.8 trillion. That's nothing. That's what we just spent last week, right? The $1.9 trillion piece of crap. So that was nothing. Now, obviously, again, this was an increase over this time period, but it pales in comparison with respect to the other groups. So the next group, of course, is going to be total net worth held by the 50th to the 90th wealth percentiles. We can call this the middle class, if you will. So again, the first quarter of 2009, the middle class was at $17.8 trillion total net worth. Where are we today? Or given the fourth quarter of 2020, this group is now at $34.8 trillion. So a doubling. Now, with respect to the middle class, most of their wealth is going to be held in real estate. Their homes are typically their largest asset. Yes, stocks are held by this group as well. Most of them are held in their 401k plans. But most of it is held within real estate. And of course, we have seen real estate now at all-time highs. And this number, again, has doubled since 2009. The other interesting thing to note with respect to the middle class against the top 10% and the top 1% is that the middle class used to have a greater net worth, greater total net worth than both of those groups, than both the top 1% and the top 10%. But that changed. The top 10% overtook the middle class steadily and convincingly in about 2004, 2005. And it's never looked back. That was obviously the lead up to the great financial crisis, real estate prices going through the moon, equity prices going up, everything, right? That's when the top 10% overtook the middle class in that run up to the GFC, and it has never looked back. The middle class, of course, was in aggregate, had greater net worth, than the top 1%. Of course, you would think, well, that makes sense, doesn't it? You have 50th percent to the 90th percentiles. Shouldn't that in aggregate be worth more than the top 1%? I mean, that's sort of what makes intuitive sense to people. And that was the case. That was the case. But when did the top 1% overtake the middle class? Because you knew that was going to happen. The top 1% overtook the middle class in about 2013. And it too hasn't looked back since then. It got close. It got close last year when equities sold off to the degree that they did, which makes intuitive sense because the top 1% holds the vast majority of those assets. That's when it kind of got close again. But of course, since what the Federal Reserve and the government has done, nope, off to the races we go again. So I just want you to understand that. This has been a huge transformation of the transfer of wealth. That is exactly what quantitative easing is and has continued to do. Okay? So I just want to make that point clear to the audience. So continuing with the total net worth held by the top 10%. So again, going back to the first quarter of 2009, for this group, you're at $22.7 trillion. Today, we are now at 46, let's call it $47 trillion. So an increase of almost 25 trillion over the past decade. And if you were to look at this graph too, you would see another line that pretty much goes vertical. And then lastly, the top 1%. First quarter of 2009, we were at $15.3 trillion at our total net worth. Where are we today? $38.6 trillion. So another 20-some trillion dollar increase over the past decade. And your biggest increases, your vertical lines, if you will, we're pretty damn close to it, are with the top 10% and the top 1%. That's how it works, folks. That's where the money is going. It's as plain as day to see. We talked about this to some extent on our presentations, capital economics presentations on monetary measures. This is where the money is going. It's where it's going. And of course, it's starting to make its way, and it continues to make its way in commodities and the things that really matter. This is why you see protests. This is why you see riots. And another thing, just to bring it back somewhat full circle, and we'll end this podcast running a little later than normal. You look at what's taking place in Myanmar with the military coup. And you see over 500 people have been killed. Their own people. And isn't that somewhat a little bit concerning, or quite concerning? Because that, too, is somewhat related to a Milgram experiment. Because a lot of people like to think, oh, well, if something ever got that bad, the military, our military, would not fire on its own people. And I'm not just saying that here in the United States. I'm saying a lot of people in a lot of other countries around the world may very well say that. If it got that bad, our own military would not fire upon us. Or at least not with live ammunition. Maybe with some sort of protest control, what have you. But nope. These soldiers are ordered to fire. They're ordered to shoot. And they do, and they kill their own people. Now, we better hope and pray that never happens here. We should hope and pray that doesn't happen anywhere. But I've been saying for 2 years now, don't be surprised when you see things that take place in other countries end up happening in this one too. Whether that's your protests, your riots, the acting like a banana republic, which we are. And I really hope and pray that our military would never do that to the American people. But you know, a lot of people didn't think what was going to happen with the Milgram experiment. A lot of people didn't think certain things were going to happen in their countries either, but it did. This is why you have to wake up. This is why you have to pay attention. This is not a game. It's why you got to stop paying attention to the sideshow circus. And I know it's tough to do because it's plastered 24/7 on the media. You got to focus on the big picture. And that's what we attempt to do here every day. But there you have it. More evidence that central banks are taunting the markets, and more evidence as to where all of the money is actually going. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.